Howdy, partners. Omar here with your February 5th London Outlook. Now, there were some tough times at the Triple Threat Ranch yesterday, and we certainly did not have good riding. Hopefully, today will be a little bit better. Anyway, it was a bit of a tough day, and I took a loss, my first loss in a little while, on the FTSE PFT, which actually, talking to some members now, some of you had a bigger stop than me and did win. Me personally, I lost. I'm just addicted to using small stops on the FTSE, and so I am still ahead for the week with gold, with my gold trade. But man, that was kind of tough. And I want to talk about a potential gold trade that some of you may have taken yesterday. Depending on how aggressive you are, the conservative traders should not have taken the trade. More aggressive traders certainly could have. It wasn't a bad signal, and we'll get to that too. But first up, let's go ahead and look at our gold weekly. You can see we're not talking about a very dramatic candle. Now, remember before I said that, we would probably get up to the line and consolidate. What I didn't really anticipate is that this line would kind of be the area to consolidate under, if that's what's happening. I can't say for sure because we don't know until we kind of move up again. If we simply drop off, then this was just a rejection. There's no consolidation. But what I am curious to see is if we do get some more bullish movement up into this line, if we go past it, or if we reject it again, or just kind of float under it. Now remember, the DAX is a really good example of an instrument that loves to consolidate right under its next area of support and resistance when it's in a good trend. And so you remember the 10,000 level area. I mean, it just floated horizontally under that area before finally breaking it. It did poke through once or twice, but before it really broke it just sat under that area. So that's a good example of what a consolidation looks like. At the moment, I can really neither be too bearish or bullish on gold. Even though I took a short trade earlier in this week, after kind of yesterday's price action, I'm not convinced, but we can't let yesterday's terrible price action lead to any determinations because it wasn't good, and so we can't take a bad day and be like, well, we can learn a lot from a bad day. And I generally don't think so. So we just have to put it behind us, look forward to a potentially good day today. I probably just should have left my week alone after that gold trade, but that's like I was telling everybody in the Asian session. I'm really good at not trading if there's no setups, but as soon as I get my first setup, then I almost feel like I have to keep trading until the end of the week. So maybe that's something I have to work on. But let's get down to today. And like I said, I want to talk about the potential trade that happened yesterday, which I didn't take because I was in the FTSE position and I just didn't. It wasn't this trade just wasn't attractive enough to me. Even though it did kind of go with what I was saying. So remember in yesterday's outlook, I had talked about two areas of closing below. One was for aggressive traders, which was the fib, and then one was for conservative traders, which was 1257.75. Remember I said if you want to take an aggressive trade, look for 1262.51 to break. If you want a more confirmed trade, wait for 1257.75 to break. So essentially we had a move up, and then we had this big bearish candle. Now I know some of you will immediately think, oh, this is a PFT. Well, it's not, because you have to understand what are we engulfing with the engulfing candle. Now I will agree that there was pressure on an area of support and resistance. There was actually pressure on two areas, and it's a little more convincing on the Fibmaster, which we'll get to in a little bit. But you can see here that we did make pressure into an area of support resistance, actually two of them, which I'll show you in a little bit. And then we had this dramatic bearish sell-off, which actually did close through two support and resistance areas. So I'm not going to say that this is obviously not a PFT because it's very, very, very close to being one. If we're going to, the only way we can not say it is if we're splitting hairs. Because if we look at the candle here, what is it engulfing? It's not engulfing the one before it. It's not engulfing the one before that. It's not engulfing the one before that. And remember with PFT, We need pressure and then an immediate engulf. And the only exception to that, it's a PFT setup is a 2-candle setup, with the exception of the doji in the middle situation. So if we look to the prior 2 candles, we don't have a doji, so it has to be the candle immediately before it. So was the candle immediately before it really a pressure candle? And the answer is no. In fact, we have to look at the market structure, and I'm hoping this will help you, because when we get into the start of this, it is looking like if the, for example, if this candle right here was a bearish engulfing candle, oh, that would have so been a PFT, you know, especially if it would have closed below 61.8. I would have been all over that. Okay, why? Because it fits the bill. We had a market that is up moving, right? And then we get a pressure move here with this bullish candle. We turn around, snap back with a bearish engulfing that closes down here. Oh man, is that a PFT ever? But let's talk about where our big bearish candle was. So our big bearish candle, yes, there was the bearish candle itself put pressure on support and resistance area. But let's see what the lead up to that was. What was the lead up? So we had a candle sideways, 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 sideways. So really our lead up to the bearish move was sideways. It wasn't really a pressure move, and especially not from this chart. Now, where it gets a little bit more tricky to say it's not a PFT is on the Fibmaster, and obviously I know that you guys are smart and are using the Fibmaster for your PFT setups more than anything. So again, like I said originally, I can't blame you if you thought this was a PFT, because it is so borderline to being one that it's easy to see that this was a, when you saw the signal without the rest of the candles, oh, it certainly looks like that's a good sell trade to take. And I also want to mention that under a lot of different conditions, if the markets weren't so bad yesterday, this probably would have been a winning trade. But here's what we're looking at. So the pressure move candle is essentially that one, because it's pushing into the bearish Dynafib. But if you want to call that next one a doji, okay, but the next big bearish candle did not engulf that pressure candle. It just didn't. So it's not an engulfing formation. That said, I'm not sure that, I just don't think any criticism can be leveled at anybody who took the sell trade. That's just it's a legitimately pretty good looking setup. Now, there are some other issues that we should be kind of cognizant of in that situation. The last RSI cross before our bearish candle was a bullish cross. We didn't get a bearish cross. We still haven't gotten a bearish cross. And we had all these little pressure indicators that we were getting a little bit of positive pressure. When you look at the Williams, it was close and sloping down to the Williams sell zone. So again, we certainly don't have a standard setup here, but we have a pretty decent, rejection, very, very borderline PFT. Okay, so I think you understand where I'm coming from. And then again, if you're a conservative trader, you have to be looking at the Momentum Master as well. And where was our breakout candle? Oh my gosh, look at the shadow candles. Definitely bullish. So again, this was a trade I would expect more aggressive traders to take, but I'm pretty dead set in hoping that conservative-minded traders would have avoided this for a number of reasons. So now today, obviously in the Asian session, we've made some more bullish moves. We've got blue candles. We're in the middle here. We're piggy in the middle of our Dynafibs. And we are just about refreshed on Momentum Master. Now everything seems to be slightly tilted more to the bullish side, so we will have to look. Now again, I'm going to say it again, that the conservative trader waits for 1282.50 to be broken. The more aggressive trader can take a long position as long as we break the bullish Dynafib and you have enough space under that midterm fib to trade. So again, on the manual chart, I think 1272.33 is kind of the initial line in the sand that we need to break above to take a long trade, and then the confirmed area is like 1282.50. And so that's what we're going to be looking for today. We will let the market decide which direction we're going to trade. The sell trade is a little bit more complicated because it's going to be slightly difficult to turn this around unless we get a pretty strong move to the downside. That said, if we do get a pretty strong move to the downside and it does have weight behind it, we should get our bearish cross channel RSI cross, and we should get into the Williams sell zone. On to the FTSE, which was a losing trade for me. So talk about my setup. Now I remember in the forum I had said it was medium risk because our momentum master didn't agree with it. So we've got, our nice down move. We've got our pressure candle here, and then we've got our bullish engulfing next candle. And to me, that was like an all points bulletin for a PFT. And because it was on the correct side of the Fibmaster, it was good to go. Now, looking back on it, the last RSI cross was bearish, and we didn't have Williams confirmation, but I don't really need that. I just know that the majority of the time those trades work. Occasionally they don't. Now, the interesting thing is when it happened the second time, it did produce another PFT. We have the red candle is the pressure candle, bullish engulfer there, and we did have a winning move, but by that time I was out of the trade and I just didn't feel up to trading anymore for the day. So those of you who were able to hold on, now let's talk about my stop loss, which was a fixed 30 pip stop. And obviously this pulled back about 40 something pips. Now, if you were looking for maximum protection, you could have put your stop down here, and I know that the traders that survived did. They saw the super convergence zone and the midterm fib. Now, keep in mind that the midterm fib and the super convergence zone are the two strongest types of support and resistance on the Fibmaster chart, so they do provide you the best protection. I'm usually pretty comfortable hiding behind some sort of Dynafib, which is what I did. I only used one of the Dynafibs because PFTs usually don't require a very big stop, but it ended up punching me out and then it went back up. So for today, we're looking for essentially either direction looks good to me. We could easily punch down for either a standard signal, which we're on the bearish side of it already with a refresh and a good move down. That could produce a really easy standard signal. We're almost in the Williams. We're still, our last cross-channel RSI cross was bearish, so it looks pretty comfortable for a sell trade. The buy trade is going to be, in my opinion, quite a bit trickier, simply because we have all this area of support and resistance above us. Really what we'd need to see, because we're not just going to get an easy standard signal if we move up. You can see that it's in the 40-50 area before we get across that buy band, and so we don't want to be taking a trade there. But alternatively, what we could be looking for is a move up, a pullback in, and then a trade that comes out of there, either standard or PFT. Moving on to the DAX. And I hope anybody that's watching this that was in the agent session, the Australia 200 did prove to give us a decent standard setup that did win. So that was a good eye on everybody. The DAX looks very, very attractive to me today for either a PFT or a standard setup. And so we have, because the DAX's range can be so big, I'm very comfortable looking for a trade above that area of support resistance. I'm comfortable looking for the pullback there, and then depending on where it closes. So we've got, kind of three main levels of support and resistance to work from. As long as we get a standard signal or a PFT off of one of those for a long, I'm totally cool with the trade. I just want to make sure everything is kosher. Standard setup at the moment looks bearish, but I think this is quite easy to reverse. One of the ones that, oh geez, and it's already moved. Darn it. One of the things that got me really excited yesterday was oil. Oil gave us a absolutely beautiful pullback. Now, what I said in the New York Outlook was that if oil fell off a lot, falafel, if it fell off a lot, then I would be looking for a trade today rather than yesterday. And that's exactly what happened. We came up and just slid down. We went, in between our trading bands here, and now we've popped out. So obviously, based on the current market situation, what am I looking for? PFT rejection of one of these three areas. We have two dynafibs and a midterm fib. PFT off of that, or a pullback and a refreshed standard signal short from there. The alternate, and it's actually not that bad and not that far off of a possibility. If we get a pretty strong move up, we could get a standard or a PFT signal above 50. So we actually have a very good position to trade oil in either direction today. The Dow, again, I said, it was a choppy market yesterday. There was a decent signal. There was a decent standard signal. And you see we came down, touched the buy line, and went right back up. You could have gotten in there or the next one. I don't think it traveled an extremely far from the second candle, but it was enough to get you to break even. So today, again, because things are looking quite bullish on the Fibmaster, we're looking for pullbacks to the Dynafib midterm fib area. Good, nice buy signal. Because of where the Momentum Master system is, we can look for a standard setup that just pops up above 17,656. So standard, PFT, we have lots of options on the Dow. So really today we have a very wide open selection of trades. And I have good confidence that we should be able to finish the week strong. Remember, today is a heavy news day, especially in the US session, which we'll be watching together in our webinar. But just be careful with that news. If you've already done really well for the week, just be a spectator or take a really small, what we call a psychologically strong position so you're not missing out, but it can't damage your wins. Remember, once you've got wins in the bank and they're a decent amount of wins, then you never want to ever risk more than you've already won. So the worst that can happen from a loss is that you're only slightly profitable versus now moving into the red. Of course, if you're only a little bit up, you don't have that wiggle room. But if you started the week strong and you're getting to that point where where you've got a decent win in the bank, then don't ever risk more than you've already won. So anyway, take care and have a great day trading. I'll catch you guys later and in the webinar.